Higher rates are here to stay, according to Fed Powell. They just kept rates the same, but he's very clear that he's going to be very aggressive about making sure that that 2% core inflation number occurs. Now, very unpopular opinion. If you're a long-term investor, you should love higher rates. And I'm sure you're hearing that now going, what the heck is this guy saying? If you're new to the channel, I will explain this to you, even if you're not new. And by the end of this video, hopefully it provides a different way of thinking about interest rates and the markets, and you'll choose to subscribe. That's all I'm asking you to do. Just subscribe to the channel to show your support. So why are higher rates good for investors? Well, guys, look at the last few years. Rates have been low. When rates are very low and you can't get any returns from putting money in a bank account, you're going to go seek returns elsewhere. It causes asset prices to go up. Then it causes euphoria. Then it causes asset prices to go up further. Before you know it, people only look at the price of the asset as opposed to the return they're actually getting. When rates are very low, money flows very easily. When there's too much money in the market going to a certain number of deals, that's what causes prices to go higher. That's what makes things irrational. If rates are higher, for example, I can now put money in a 90-day treasury and get 5.5%. You better believe I expect a higher rate of return from other assets. So that'll keep prices low. If you're a buyer of assets, which is anybody here who's watching this video, our market is 25 to 45. And even if you're older than that and you have 5 or 10 years left till you retire, you want lower prices. It's the only thing in the world that perplexes me that people don't like things on sale is investments. I don't get why. Last time I checked, if I like Apple at $170 a share, which I don't, why would I not love it at 85? Well, of course, at 85, there's a lot of negative stories out there. But that's why we're here on this channel, to teach you that news follows the stock price, not the other way around. What I mean by that is when news occurs, the stock price doesn't change. But when the stock price occurs, then all of a sudden the negative news. Prime example, look at Meta. Meta hit $88 a share just November of last year, 10 months ago. Everybody was saying Zuckerberg was an idiot. He was past his prime. He was done. By May of this year, a mere 6 months later, Mark Zuckerberg was a genius because the stock had flown right back up. Does that make any sense? So the same thing with rates. Chairman Powell here is here to fight inflation. And I get it. Inflation is going to cause, having higher rates are going to cause probably higher unemployment, which causes problems for families. I'm not trying to discredit that. But as an investor, you want lower prices. And the younger you are, the lower the prices you want them to be. Does that mean if a recession hits, that earnings and things like that won't get worse? Of course they'll get worse. But you're not here to buy based off of 1 year results. We're here to teach that process of looking at a company over a long period of time. Everybody in the world's a long-term investor until there are short-term problems. But you're watching this video, which means you think differently. And I want you to think the same way I do, which is I want to take advantage of short-term price fluctuations. I want higher rates. I want my cash sitting there waiting for the right investment at high rates of return like 5.5% that I get today on my 90-day treasuries. The reality of it is this. Rates have to be high to keep inflation down. Why is that? Well, the higher rates are, the less consumers are buying. Look at homes, look at cars, look at expensive items people are going to finance. They're less likely to do that, which means then the factories and the businesses that provide those goods and services are going to slow down. And when they slow down, they pay less money, which keep costs down. When inflation's high, it drives up home prices. Now, their goal is 2% of core inflation. Core inflation is that CPI you always see, less food and energy, because food and energy is very volatile. They can change week to week, month to month, day to day. You've seen the price of oil lately has skyrocketed. Earlier this year, it was plummeting, so we saw inflation really drop, but core inflation was still high. I don't like to overcomplicate things. But I definitely want to sit there and take information and say, this is really what's at the base of all this information. There are hundreds of thousands, about millions of data points you can look at, but really that's not necessary. Investing is one of those areas where less is more. Stick to certain processes, stick to certain foundational beliefs. Your goal should be to buy more cash flow for less money. And it happens time and time again where a company will get beaten up even though their free cash flow is the same or growing, or it hasn't dropped as much as the stock price has dropped. Those are the opportunities I want you to find. And the more This guy raises rates, and the better investor that you are, the better you will do. Everyone's watching right now says I'm a long-term investor. And I want you to be that way when stocks fall 50%. I want you to be that way if stocks fall more than 50%. I want you to be that way no matter what. I want you to be calm and say, I'm not chasing these crazy stocks like Tattooed Chef, Workhorse, Neo, all these stocks that are down 90+% since those YouTube hypesters went and made crazy predictions without any fundamentals behind them. We're here to teach fundamentals. We're here to talk about the economy in the real way. And the real way is higher rates are actually better for long-term for the economy. You want to slow things down. You want to get rid of those crap businesses. If you're a business owner out there, you're probably one of the good ones. How about your competitors? They're probably sucky. Guess what? Low rates keeps them in business. Do you want them in business? Of course not. You want to weed out crap. And the crap gets weeded out during bad. How many people I knew back in 08 and 09 who were terrible, terrible investors and got wiped out? And I said, okay, they got wiped out. Why? Because they weren't practicing good investment principles. Now, I've gotten criticized lately for being too conservative and all this stuff. Fine by me. I'd rather sit back, relax, and collect 5.5% of 90-day treasuries while I wait for the right opportunity to pounce. And that's all I'm trying to get across. So again, if all of this makes sense to you and what I'm saying intrigues you a little bit, whether it makes sense or not, subscribe to the channel. Subscribe to us, listen to more videos. We have 2,500 videos out there that we talk about things like this. During good times and bad, we're saying the same things, except for when things are bad, we love it. I love red days. What's the market doing right now? Right when Jerome Powell announced the NASDAQ and the S&P, the Dow dropped 0.5%. Let's see where they are right now. So I'm going to pull this up right here in our software, in our community. Okay, so the S&P is about even. The Dow is up 0.5%, and the NASDAQ is down about 0.2. So they're still higher than their lows for the day. But guess what? I wish this was minus 22%. I wish this was minus 44%. I wish this was minus 80%. You might sit there and say, what a sociopath. Yep, I'm a sociopath. Guys, you should want a bigger discount on everything you buy. Think about your favorite thing in the world to buy. Think about it. Would you rather pay more or less for it? Yet in investing, we always want to pay more because it makes us feel warm and fuzzy. I like buying stocks that go down. Nothing makes me happier than the stocks. I own 12 stocks right now. I want to take it to 30 or 40. Nothing makes me happier when those 12 stocks are down. The other day, I was talking about a position I owned, and I was pissed. It's up 30% since I bought it. Literally pissed, and I'm not kidding. I was like, God damn it, why won't it go down? If that's the mentality you want, it's within my core of how bad I want it to go down. It's in my core. And if you want that, subscribe to the channel. Guys, what's going to happen in the economy is going to happen in the economy. I just want you to remember, no matter what happens in the economy, the U.S. ends up better in the long run. Every single time we've been through recessions, depressions, a worldwide shutdown of the pandemic, terrorist attacks, presidential assassinations, and guess what? World wars. And guess what? We end up better every single time. Guys, again, thank you very much for watching this video. Subscribe to this. I appreciate it.